Well, next we turn our attention to China and the sheer size of the Chinese market, which has long beguiled investors, often to their detriment. As a journalist, I actually had the privilege of being in China for the turning of the first sod for the first brewery that Foster's was building. That was in Shanghai in 1993. By 2006, Foster's was out of the country after 13 years of not making a profit. Consumption now, though, is a key driver to the Chinese economy. And of course, Chinese consumers have become increasingly savvy, not just about what they buy, but how they buy it, talking about social media. So what is the investment climate and what are the opportunities and what are the challenges? Please welcome my panel. Martin Matthews is the CEO of Brand Collective, which distributes and retails a whole stable of fashion and footwear brands, including Mossimo, Volley, Hush Puppies, Julius Marlowe, Clark, Superdry, and Shoes and Socks. Of course, it was previously a division of Pacific Brands and became independent with a buyout by Anchorage. Mark Middleton is Group CEO and Executive Director of the Icon Group, a highly regarded radiation therapist himself. And since taking the reins in 2015, the group has expanded into Singapore and New Zealand. It's got a significant Southeast Asian presence, and they've driven acquisition in the chemotherapy compounding space to deliver one of the largest, Australia's largest oncology manufacturer. And Kathy Chen, she's partner and CFO at SB China Venture Capital. Kathy's got financial and operational experience in a field of asset management companies. She joined SBCVC in 2010. She's got close to 20 years experience in finance and accounting, and she joins us from Shanghai. Is that correct, Kathy? Did I get that right?
Absolutely.
Please welcome my panel. So, Kathy, let's start with you. If we can get just a general picture of the investment climate in China at the moment, and I don't know if you've had the chance to read the Fin Review this morning, you would have noted that there was some research out yesterday from AmCham in Singapore that talks about how a quarter of US companies are apparently redirecting investment away from China. So what's the climate right now?
Yeah, so I think China, as we actually spoke yesterday, was very heated for past 10 years or the 15 years. The industry has grown probably the same as the rest of the world, if not more, about 3 times. I think the recent environment, especially in the last probably 12 months, obviously the cause of it is the trade war. So the overall investment activity is certainly coming down, and then also the valuation comes down. That's a general picture. However, on the specific sectors, so such as actually probably the two my fellow panelists will be great in terms of creativity, individualism, and as well as deep tech actually are booming. So that's also part of a reason of trade war, which we can talk about later as well.
That individualism is a really interesting phenomenon. So I suppose is your message, you sort of have to steer clear of the sensitive areas. Telecommunications would be an obvious one. And you talk about catch-up technology in a space. Tell us about that.
Right. So I think, as you, again, it's all in the press a lot. In terms of the technologies that which Western world are pretty sensitive, relates to IP issues, relates of the security issues. So certainly China is being very concerned about that. And also Western world is being sort of threatened. And our President Trump obviously saying that no technology is going to be transferred to China. So China is concentrating on possibility of building our own track of the deep technology. So those are the ones that we're seeing. The business are coming down, activities are coming down. So we see Google, we see Microsoft, all the big U.S. entities actually reduce their activities in China. In the meantime, you see Huawei and then other Chinese companies, deep technology companies, are actually experience a huge or very, very quick growth in that. I guess, yeah.
Well, as you said, the examples that we've got here are areas that you are allowed to play in, it would seem, relatively safely. Mark, you're taking radiotherapy into China. You hope to treat your first patient next month, I think.
We do indeed, and it hasn't happened overnight, though, as you can imagine. We've been working really hard over the last 3.5 years.
Oh, wait, just to jump in there. 3.5 years, 38 visits to China. You should have just
38
moved
visits.
there. It would have been easier, wouldn't it?
Well, I'm not sure. My wife doesn't want to move to China at the moment, so I do what I'm told. But look, we've spent a lot of time on the ground establishing relationships and working really hard on who we would partner with to deliver cancer care. And I think for us, the sheer volume of new cancer diagnoses a year in China is mind-blowing. 4 million new cancer diagnoses a year. Half of those people pass away. So the sheer need for cancer care in China is overwhelming. There is a readiness by the healthcare sector in China to work with partners to enhance access to cancer care for people. And if the reality is, if we don't do that, cancer incidence in China is going to increase by 70% in the next 2 decades. We're facing a public health catastrophe. And I think there's a real readiness from the Chinese healthcare sector, both public and private, to work with partners who can help. So we've spent a long time establishing partnerships with really, really high quality hospital brands, and I think
private hospitals,
yes, like any partnership or any relationship, takes time, takes trust, and it takes being aligned. And we're very fortunate that we've found partners who are equally as passionate as Icon in delivering great patient care. Still got to get the commercial elements correct, which does take time as well. But as you say, we're very pleased to be treating our first patients in China next month.
But it's a volume story for you ultimately in China.
Well, it is, because we've been very successful in Australia in taking cancer care to places where there was no cancer care before. And really, if you look around regional Australia, it's Icon who's delivering cancer care. That approach does not really exist in China. It's really where Australia was some 15 to 20 years ago, where you needed to go to a major tertiary hospital in a city to access really high class cancer care. You don't have to do that anymore in Australia. We're really successful in taking cancer care to where people live, and that's what we're going to do in China. To do that, however, you can't just establish one cancer care centre in regional China. You need a network of cancer care centres where you remove the geographical barriers of where specialists and resources are located. We've done that really well in Australia, and that's exactly what we intend to do in China.
And before we bring Martin in, I just want to drill a little bit more into your business model in China, because here you run holistic cancer centres, if you like. In China, you don't. You're very much just the radiotherapy. And in fact, you're even, for the work that you're already doing, things like scheduling, which is your IP, you actually run here. So can you tell us a little bit about the thinking of how you've gone in bit by bit and what you're protecting back here?
Yeah, absolutely. Well, we've decided to enter China with radiation therapy, which is one of our 4 core capabilities here in Australia. We also do chemotherapy compounding, pharmacy services, and the delivery of chemotherapy. Now, the reason we've chosen radiotherapy is because it's a high technology-driven enterprise, and you deliver care with very, very expensive technology, and the technology is universal, no matter where you are in the world. And so for us, our team has developed almost 20 cancer centres over the last 3 years. They can roll out cancer centres with their eyes shut, regardless of where they are. So we're really, really good in that space. We're able then to do certain things remotely. We can do quality assurance on those machines from wherever we are in the world, because all of the machines we have across our network are matched. So the quality assurance in Qingdao can be done from Toowoomba, can be done from Cairns. So that's quite unique, and we can also do all of the radiotherapy planning from our very high-tech radiotherapy planning hub in Brisbane, which also protects our IP because that can be turned off at any time.
Yeah, well, and I'll get to the IP question in a minute, but Martin, you're taking Volley shoes into China, and you're also, I think, in the process of taking the Grosby brand as well. But tell us about Volley, because they took off after a Chinese celebrity was photographed wearing them at the airport.
That's right, yeah. So we had a little bit of luck about 3 years ago, where a celebrity by the name of Fei Wong had seemingly purchased the shoes organically somewhere in the US, I think. wore them in Shanghai airport, and she's the type of celebrity that the paparazzi follow around. So to put some context into it, she's China's #1 selling canto pop star in history. So she's kind of like the Madonna or Beyonce of China. When she's never, being of that generation, she didn't build her career on, social media fame, but her Weibo account, which is kind of the Chinese Twitter, had 23 million followers when it was discovered by the Chinese people. She never actively promoted it. Exactly, the population of Australia, her actual following. So she's sort of considered a tier 0 celebrity in China. And off the back of that, obviously the fame of the Volley brand grew immediately. And quite interestingly then, demand right back in Australia grew enormously, because a lot of you would be familiar with the Daigou market, so Chinese-based Australians that buy product locally and ship back to Australia. And that's really the first we noticed, is that we started selling out of size 4 shoes. And so off the back of that, we sought partners in China and opened our first Chinese retail stores in the middle of last year, and also an online business slightly before that. So.
It reminds me of probably a few of you in the room have heard the story that Christine Holgate tells from Blackmores, where she was told by a fortune teller, this is a true story, to wear green and get a photo with Xi Jinping, which is a really hard thing to do because you're not meant to take a camera into meetings with him. But she was at a G20 or some such summit, and she managed to get Alan Joyce to take a photo of her with Xi Jinping wearing green, which they then posted. And then Blackmores, of course, we all know the story of Blackmores in China. So maybe it's nothing about marketing and business plans and things like that. Look, retail's obviously really different to health. But the journey that Mark talks about, the 3.5 years, the huge number of visits, how hard was it for you to find the right partner, particularly given that you source 90% of your product from China already? So you had an understanding and a presence there in that sense.
Yeah, I mean, look, we've had a presence in China for 20 years, so we, from a manufacturing perspective, and so we're very familiar with the manufacturing market in China, but of course, the retail market is incredibly different. In fact, our factories in the past had offered to take Volley into the retail market in China, but in a typical fashion, the manufacturers think like manufacturers. So, from their point of view, Volley was, a relatively cheap shoe to produce, and they wanted to just sell it into the mass market at a very low price, and they didn't understand the concept of branding and consumer marketing. So for us, it's a completely different category to be in and a completely different skill set. So it is very difficult to, I think, proactively go into the Chinese market in the consumer business and seek the right partner. It's an extremely diverse market. So you look at, say, Nike, who operate throughout all of China, and you would tend to assume, as you would with other markets, that they have a single partner. Because that is how they would operate in other international markets. In fact, they probably started with something like 30 to 50 separate franchise partners, one for each territory. Now, that has largely been consolidated in the last few years, but the reality is that any single Chinese province has an economy larger than Australia's economy, and there's enormous diversity in expertise, relationships, and so forth. So it isn't as simple as finding the one business that knows how to do retail in China. And then there's also the factor of actually finding a business that is well matched with your own in terms of scale and size. So prior to the China experience, we'd had an experience in Japan with a Toshu Corporation. A lot of you would know them. They were simply too big for us. So we signed an agreement with them, but we just could not get the attention and focus we needed to actually develop what was a relatively niche and unknown brand. So as it happened in China, we actually partnered with an Australian-based Daigou company that developed as our master distributor and our online partner in China. And then our first retail franchisee was the daughter of a Chinese property developer, and they operate a number of retail brands, primarily out of Zhengzhou, but also have operations in Beijing and Shanghai. And we found that they've been the right size for us. They're young entrepreneurs. They do not have very significant businesses such that Volley would be too much of a distraction for them, and they're highly entrepreneurial. They see the long-term opportunity of developing the brand with us. So I think that's the balance you need. But then, of course, that comes with its trade-offs as well in terms of capability and experience.
You also have a model, don't you, that you get paid on supply of product, not sale of product?
Correct, yeah. And I guess for us, we didn't want to go in with a capital-heavy and an infrastructure-heavy model from our perspective. We don't know enough about the market, and we probably weren't up for the risk. So we went in with a capital-light model, effectively a distribution model. Probably remains to be seen how sustainable that is. That is how typically models have worked in more advanced economies for market entry. But what we found we are a distributor of international brands in Australia ourselves. We find that model isn't sustainable in the long run. As the consumer starts to seek price parity, for example, you can't really have a sort of a triple margin system that makes money for all the parties. So it's a good way to start. It's a low-risk way for a brand to develop. But ultimately, we will probably need to move to a more integrated model.
Kathy, take us through some of the challenges. Both Mark and Martin have found partners, not necessarily an easy process, but how do you go about that, and what are the pitfalls that people often fall into?
Yeah, so I think SB China Venture has been making investment in China over now almost 20 years. So we're pretty much seeing how the industry has grown. So I think in the past, we have done some US technology transformation to China, and now we're seeing more and more, right? So I think even in light of the current trade issues, we do see foreign business now going to China. I think my two fellow panelists on the healthcare as well as the branding, I think this is what's much needed in China. In terms of the healthcare sector, we've been investing since 2005, 2006. We all understand in the healthcare sector that China's healthcare spending is very lagging of the US market. So this is the area that, again, to team up with the local resources, and then also people really understand IP. Actually, the Chinese IP stands with international probably is a little bit different. So again, you really, in the healthcare sector, there is a lot of IP involved in. Not even when we talk about IP, not just only technology, we talk about processing in terms of the ways of dealing with internet securities, all of that, because actually we have a internet security healthcare companies involved in China. It's pretty big. It's called Jingyi. But these are the issues that we have dealt with. So it would be great.
But can Mark feel fairly comfortable on the IP front, or is he very wise to keep some of his very precious IP back here in Toowoomba?
I think it's good to be cautious. Again, once it's out, right? So I think in terms of protect your own property, so I think it's good to stay behind a little bit and don't let it out right away, because once it's out, right? So that's what we see IP. So I think it's to be conservative and then find a trusted partner in China and really understand the local market. That's a very key, because China, even though it's one country, as we will say, like some of the provinces is probably just as big as Australia. So it's very complex in terms of not only the central government has its own policies and drives, and also I think in terms of different provincials. Believe it or not, in terms of Commerce Department, Tax Department, even some of the outbound investment or inbound investment, at those levels, you probably have to do a lot with the provincial level in terms of specific areas that you have to have deep knowledge and have local partners. I think, and also I think a big culture barrier.
So how do you find the local partner? I mean, clearly you can use brokers and people like your organisation, but what's the key? How do you make sure that your interests are aligned? And you've told me before that in retail, for example, there's some very specific. If you're just a landlord, for example, you don't have the same interests. How do you align interests with your partner?
Right. So I think one is your interest has to be complementary. Right, so again, has to be a win-win situation. It will have to benefit both. So again, the best situation would be that you go into the China market, and maybe again, actually, there's a more and more trend, and what we see in our investment is that some of the Chinese company now into a level want to go globalization. So again, this is a cooperation that you go into the China market, and then some of the Chinese product are going exporting. So this will be a mutual benefit, and then I think that probably goes a long way.
There's a question from the floor on this, actually. What are the three important, I don't know why three, you can have 2 or 4, depending on what you want, 3 important lessons you've learned in finding the right partner in China? And Mark, you talk about the grey areas of the business negotiation. Tell us about your most important lessons.
Well, I think certainly when I first started going to China, everyone I met owned a hospital. until I worked out that they didn't own a hospital. So, you know, and healthcare is seen as a really, really, it's a popular investment area in China. And what I actually found out that some of these people I was meeting were actually then going off and saying, "Oh, well, I've met with ICON," and that's how they would raise funds to invest in hospitals. So look, like all things, you want to find legitimate partners and people who have the experience and the backing and the resources to actually make things happen. So I've really learnt that. The other thing that I've learnt, which I think is really, really important for people doing business in China, is that the hierarchy of business in China and it's a much more structured hierarchy than what we have in Australia. You know, I'm the CEO of ICON, but you know, every single one of my 3,000 staff members would know they could email me if they wanted to, or they could call me if they wanted to, because I'm accessible. You know, in China with large, you know, corporations and healthcare companies that we deal with, the chairman's God. And, you know, you have to, when you're doing business in that way, you have to pay due deference to that leader. And the relationship between myself and those leaders has to be personal. And that means it's messaging on WeChat. It's not via emails, it's not via, you know, official documents, it's messaging on WeChat. And that's one thing that I've really learnt. It's almost the theatre of leadership, of how you conduct those meetings, how you interact with that decision maker. You know, again, in Australia, I would make decisions with my leadership team. In China, there is someone who is ultimately making those decisions. And I think that's a very, very different approach that certainly took myself and I think other Australian leaders some time to come to terms with.
And how challenging is that, knowing how far that relationship needs to be pushed? Because, I mean, with the concept of guanxi in China, I mean, you don't want to get, you don't want to cross the line and find that you're affecting a bribery law or something. I mean, how do you navigate that?
Very, very carefully, and certainly never. And I'm not talking about a relationship that means, you know, buying someone something or exchanging gifts. Although, you know, exchanging gifts does happen between leaders. I'm talking about a relationship whereby you can shake hands on a deal, and that deal will happen. As opposed to, again, we're very fixated on a legal document and a contract. Those things are still very, very important in China, but ultimately it's the relationship between two leaders who have decided that something is going to happen and maintaining that. It's about building rapport, it's about building friendship. And it's actually a very genuine, authentic relationship. It's not built on, I'll buy you this and you buy me that.
But nothing's final until it's gone to that.
Nothing is final, and you will go through meetings and you'll wonder why haven't we got a decision? And you won't have got a decision because there may be a group of leaders who aren't ready to take that decision to the absolute decision maker. And that takes some time to get used to, and just when you think you've got all the answers, they change the questions.
Is that your experience, Martin?
Yeah, absolutely. And look, I also struggle with the same thing in terms of the hierarchical nature of business in China. We've been fortunate, and I think, you know, we always try to find partners that are culturally aligned as much as possible. Obviously, there's a degree of difficulty with that in China, but you know, we have found partners that do take a quite different philosophy. Our franchise partner, for example, has named her business Smile. She has an experience where in China business wasn't done with a smile. She wanted to do it differently, and she felt it was all really about much more sort of human, personal relationships. But in any case, that is always been, I think, the case in China. It's a different context in different generations. And for us, I think what Mark said is absolutely right about contracts being, you know, relatively less important in China. I mean, the way we do business with our partners in Australia, our international brand partners, is in a sense quite formal. Whenever we have a negotiation, we set a business plan, we have a contract that matches that business plan, and those terms are frequently talked about, updated and reported on. In China, effectively the contract provides bookends really of the relationship that you hope you never have to enforce. And the vast majority of business is done on trust and relationships. There's a lot less defined commercially in our relationship in China than it is in other markets, and so a lot more room for flexibility and adaptability.
And
that's
the flip side to that, though.
And of course, that creates greater risk as well. So, having said that, you need that agility because going into this business, as you all know, it's difficult to set a 5-year plan anywhere these days. To try and set a 5-year plan in China for an emerging business is a folly. So, you have to be operating on different assumptions from day to day and week to week, let alone year to year.
Kathy, is this all reflective of this is the right way to look at it, navigating the hierarchical structures of Chinese companies?
Right. Actually, as I'm listening to it, I think it's almost like to a different extreme because healthcare industry is much more structured, and actually the way that you deal with people mostly are from old school, and the way that finding hierarchy, it's much more in the a sense of doing business in a very much higher hierarchy and organized business. So I always joked around that to find the hierarchy in China, the best way is to take them out for dinner. The way that how they arrange the seat, there's art to arrange the seat and who speaks first and who speaks last. This is where you need a local person. I'm even bad at it because every time I have to go and walk in there, which is the most important seat, right? Depends on where the door is at, where the wall is at. It decides the most important seat. And typically, that person probably will speak the least in the dinner table. So again, these are the intricacies, sort of, because the people they're doing business in the healthcare area are, more sort of regularly, it's deal with the regulations, deal with the old school people. Fashion business is a completely different thing. So fashion business is a much fast-moving business, and that's what you said exactly reflect the truth. There's less actually depend on the contract. Things changing day by day, and that's where I think I see a very different things, and probably people don't care so much about hierarchies. It's whatever works, let's go for it, and let's do it. So I think that sort of really depends on the sectors that you're in, on the way that doing business are quite different in China.
What about regulatory structures and the ease with which one can read them and rely on them? We've seen a number of cases, and you think of Bellamy's as a really good example. I mean, they had problems when they tried to dump the daigou, but they also, of course, have now got problems with changing regulatory structures that are not necessarily as transparent as they could be.
Right. I say is always never underestimate the regulatory things because this is something you at least can go by with the contract, with the court. I mean, nevertheless, I think China has been changed quite a bit in terms of the cost system, especially in the sense. It's actually pretty transparent. And then I do have confidence in there. So that's why you say you do want to have legal papers to back into, especially the important things. And this is where something that you can always fall. But you can always, on top of it, is actually not the hard regulatory things that you do. That's where the people gets involved in. That's where the people can help you. So maybe that's a deviated, because in China, not everything is written by law or by regulatory, right? So, I'm from a tax background. I always joked about it when in US, you have probably one feet of tax papers in terms of regulatory things that you can quote on. In China, there's very few of them. So that's where there's creativity comes up and how you argue your case, and that's what you have to do.
So it's almost by osmosis, you're meant to know what the rules are.
Correct.
I guess, though, in healthcare, Mark, that is probably one area, as Kathy alluded to, that where your regulatory structure might be slow to change, but is still relatively readable.
Yeah, absolutely. But you have hit on an important point. It is reasonably slow to change. And just as an example, you can have the same technology is approved, but the upgrade of that technology is not approved and has to go through an approval process, which means that you have China lagging behind Western countries for the adoption of the latest and greatest technology in cancer care, which is problematic because people want to upgrade, people want to introduce new technology, and you can't do it unless you break the rules. And no one, certainly as an Australian company establishing ourselves in China, we're not interested in doing anything outside of those regulations. The other point that is really interesting as well, that in healthcare, regulations are different from province to province, which makes it somewhat difficult and complex when you have projects in multiple provinces. And the only other point I would make too, and I think this comes down to the example of tax in the US, a pole this high, in China a very small pole. Some of the regulations are open to interpretation, and we work with a legal firm in China and our legal firm in Australia, and their interpretations of certain things are different. And I think also that Australian law firms are far more risk averse than and perhaps the Chinese law firm that we're working with as well. So ultimately, you've got to be able to make a commercial decision within those regulations about what's right or what seems to be the right approach. But the other thing that we've done, if there's any doubt, we'll go and speak to the local government.
What sort of a hearing do you get?
Very receptive. Again, I think when you're a very large Australian healthcare company, you're able to get meetings because there is a view that we can bring enhanced technology and expertise to China. And as I said earlier, the healthcare industry in general is very, very keen to do that. So we get a very, very good hearing.
Martin, I'm really curious about why you are doing bricks and mortar. I used to do this conference many years ago, and I can remember sitting in a VC session with actually a company that is no longer here, but it was all about bricks and mortar are dead. And particularly in China, where online shopping is just so massive. Why do you want bricks and mortar?
Yeah, I mean, look, ultimately for us, it's about introducing people to the brand. So, we have a fundamental belief that, yes, online is an excellent channel to transact. And of course, in certain categories, you can afford to be a pure play online player. But there's still a lot of traffic through shopping malls. In a footwear business as well, fit is somewhat important. So people do, when they're being introduced to a brand for the first time, like to know what their size will be. And so that, for us, is ultimately important. Now, would we, if we had to invest all the capital and assign the leases ourselves, would we have the same appetite for investment? Maybe not. Our partners are confident they can make it work, and ultimately, it's them taking on that risk and managing, that balance. So it is an interesting time to be entering China in that sense, because, as you say, online, and there in particular, as their consumer has sort of entered the market, that they've entered immediately as an online consumer. It's not been as much of an evolution for them. So you can certainly do an enormous business just online, but we think it's important for brand building to also have a physical presence.
We were talking earlier about IP. Tell me about your experience with IP, particularly with the making of volley, and also the other side of this, which is the Chinese consumer and what they look for in a shoe, particularly a shoe that has a rubber in it and might not be.
Yes, that's right. Yeah. No, there's been a couple of interesting learnings. I mean, on the IP issue, we did have a lot of counterfeit issues. So when the Fei Wong photo went viral, every factory that had ever had a set of volley moulds or anything that looked like a set of volley moulds was producing volley en masse and selling it to the market illegally. What we actually found was that the government was very, very good at shutting that down. So they responded incredibly quickly, and I think, Kathy alluded to the regulatory framework in China has significantly stepped up, and particularly with IP protection issues, because that's obviously very important to international businesses and Chinese businesses. So that was a great experience, and we also found, our partners assisted with that heavily. So the partner of our master distribution company is the son of a Chinese Communist Party official.
That helps, doesn't
that
it?
relationship helps enormously. So, and that government relationship is, you can't underestimate how much impact you can have with that.
You just want to hope they don't get purged, because that could be bad news for you.
Yeah. But on the product quality issue, what was interesting, and is still a learning for us, is that the slightest imperfections in product the Chinese consumer notices. So we watch them purchase the shoes. They pick them up, they hold them this far away from their face, and they look at every angle. An Australian consumer doesn't do that while buying volley. Like we basically have no returns for product quality issues. Whereas in China, we found any kind of manufacturing imperfection became a problem for us. So we had to significantly increase our quality standards. And I heard a similar thing from RM Williams, who have also trialled their product in the Chinese market and found it's a single piece of leather. We think of it as a very high quality shoe, but because it's handmade and from a natural material, there are variations. And the Chinese consumer hasn't quite understood that, and particularly for what I would call aspirational middle market product for the middle class consumer. For them, it's an expensive purchase. So it's an $80 purchase, but middle class in China is maybe $15,000 US annual household income. So it's a very different context for them. That investment is a much larger percentage of their disposable income, and their expectations of an international brand is that the product is absolutely perfect. And in Australia, it's a very the standards are in a sense far lower.
Kathy, a question for you here, and I'll let you respond as much or little as you wish. What, if anything, do the protests in Hong Kong and the Chinese response tell Australian businesses about the mood of the Chinese people themselves?
Right. So I think what's recent happened in Hong Kong, it's obviously very controversial. I think that I think what's happened in Hong Kong just tells you the social media is very powerful, as what we just said here too. And then China is quite different from, let's say 40 years ago. I mean, Cultural Revolution, right? So things get out quickly. The government has a consortium, and I'm pretty sure it's not one person's decision. Even though in Hong Kong, actually, the face of it is the Hong Kong government actually to resolve the issue. So I think overall, we should have faith in the government to a certain extent. I think that we all see happily what at the end the result is, and I think that's a good direction to go to.
You mentioned the trade war earlier on, and I know that you both, to an extent, see yourself as immune from that, but you not so much, and you're actually moving some of your production.
Yeah, it's a different impact for us, and in our broader business, I mean, about 80% of our volume is manufactured in China. The problem for us is that the US companies are very, very quickly withdrawing manufacturing from China and entering the markets that we were starting to shift production to, like Vietnam, Indonesia and so forth. So it creates two problems for us. One is, while you would think that the withdrawing of US volumes from factories in China would create a great opportunity because you'd have excess production, it comes at a time where a lot of that level of manufacturing is probably reaching the end of its viability in many of the more developed provinces of China. So rather than saying, a factory owner, rather than saying, I've lost this volume from the US, I'm going to offer a better price to my Australian partners, they're more likely to say, you know what, I give up, I'm closing my factory, I've made my money and moving on. So it creates a significant operational challenge there for us to resource the volumes. And then secondly, the next logical place for us to go is Vietnam, and suddenly you've got all of these massive US companies calling every factory in Vietnam and saying, can you produce 20 million pairs of shoes? And we come along and say, can you produce 1,000? So that is a dynamic. From a consumer market perspective, I think it's an enormous opportunity for Australia. The US rhetoric is now getting very heated in terms of, we are going to separate ourselves from China.
It's decoupling.
Exactly, that's right. Decoupling is the term they use. I'd like to think it's just a negotiating tactic.
Although we are seeing it already, I mean, to a point, diversification.
Absolutely. But look, I think the opportunity for Australia is to hopefully see through that and continue to invest in building our businesses in China, because no matter what the outcome of this trade war is, China is going to be the world's largest economy. That is, without dispute. So.
Which makes our next question, which I'm going to put to you, Mark, but it's from the floor, a rather strange question. But we talk a lot about how we have learned to adapt to Chinese business culture. Has Chinese business changed in some way to adapt to ours? I would have thought in part it's when in Rome do as the Romans, but do you see a change in the way? I mean, there's no question Chinese business is much more sophisticated now.
Yeah. Well, look, I'm not sure we've seen a change in the 3.5 years I've been going back and forth to China to do business. But what I think is very real is the receptiveness of Chinese business to Australians and Australian business. I mean, Australians are very agile in our thinking and the way that we adapt and can find a way to get deals done. And I think maybe that's an advantage that we have over some other developed Western nations. And certainly in healthcare, we don't go and tell people what to do. We go with a collaborative approach. And I think that's what sets Australians apart. So, look, I think Australians are very, very highly regarded in China. Australian healthcare is very highly regarded. Australian products and Australian produce are very highly regarded. So I think that it's a wonderful opportunity for Australian companies right now, and obviously issues between China and the US, I think, make those opportunities even greater.
Not to say that we don't have our own issues with
Correct.
China, but as you say, there's certain sectors, which goes back to what Kathy was saying at the beginning. Just a last question to each of you. Kathy, to you, what is the biggest mistake, do you think, that companies make when they are planning or they're expanding into China? What's the biggest mistake?
Right. You think you can go or do it by your own. Because actually you have done successfully, let's say in Australia, in US, why can't I do it in China? It's just a different market access, right? So actually it's much more complicated than that. Actually, even in China, I think the culture of China are very diverse as well. I mean, you think that Chinese people all Han, but really from province to province, different dialects. And nevertheless, I also said that at provincial levels, they have actually pretty powerful in certain things. So again, at different areas in China has its own subsectors things. So you do need to find a very capable local partners. I think that's your first step to success.
Martin, can I ask you, what do you know now that you wish you'd known when you started?
I think for us, probably the product quality issue was the biggest one. Had we known, the standard of the Chinese consumer, we would have probably moved faster and harder to improve our manufacturing capability. And that's probably been our biggest hindrance.
Mark, I hope it's not product quality for you, because that's really not good in healthcare. What is your biggest thing that you wish that you know now that you didn't know when you started?
When you first start doing business in China, avoid the white liquor at business meetings as much as possible. That would be the sole piece of advice I would give everyone.
Just sign new deals when you shouldn't have?
Stick to wine or beer.
Please join me very much in thanking our panel, Mark and Martin and Kathy.